Let's talk about blockchain, the technology that was supposed to either liberate humanity or turn us all into unpaid JPEG collectors. But when it's not busy inflating the price of monkey pictures or the subject of FBI investigations, it's revolutionizing real industries like finance, supply chains, and government services. Let's talk about it. At its core, blockchain is a digital ledger that keeps records secure, transparent, and unalterable. It's a magic spreadsheet that everyone can see and no one can secretly edit. While early hype was all about speculative crypto trading and questionable NFT purchases, industries are using blockchain for actual problems like supply chain transparency, because knowing where your organic, cruelty-free, gluten-adverse avocado actually came from matters. Or cross-border payments where banks no longer take 3 days to charge you half the transaction just to move the money. Or digital identities and security, because maybe logging in without 47 password resets would be nice. Let's break it down a bit further. Modern supply chains are a mess. They involve thousands of companies all hoarding data. The result? Zero transparency. Counterfeits everywhere, and food recalls that take days to trace back to the source. Blockchain fixes this by making supply chain data public but secure, so everyone can verify where products come from. Walmart already uses IBM's Food Trust blockchain, so when there's an E. coli outbreak in lettuce, they can pinpoint exactly where it came from within seconds. Before, it took a week, and nobody wants mystery romaine lettuce just sitting on shelves for that long. Companies like Maersk and DHL have tried using blockchain for global shipping and luxury brands, and using it to fight counterfeits. If blockchain keeps proving authenticity, we might finally live in a world where no one is scammed into buying a fake Gucci bag that says Chugi. If supply chains are messy, finance is worse. Enter DeFi, meaning decentralized finance. Instead of banks, DeFi uses smart contracts. These are self-executing agreements that say, if X happens, do Y. That means you can lend, borrow, trade, and take out flash loans you borrow and repay in a single transaction, without any human involvement. It's banking, but without the bankers. And suddenly, the system works faster and charges way fewer fees. Even big banks like JP Morgan are jumping in. They built their own blockchain network to move money faster and cut out the middlemen. And when JP Morgan is using crypto whilst publicly saying it's a scam, that's how you know it's serious. But don't get too excited. DeFi is still a regulatory headache, and plenty of projects have been hacked because writing bug-free financial software is hard. Imagine if you could buy part of a house instead of taking out a mortgage, or invest in fine art without being a billionaire. That's tokenization, turning real-world assets into digital tokens. For example, BlackRock, the trillion-dollar investment giant, just launched a tokenizing money market fund, backing it with US treasuries. This is huge because it means financial institutions are moving traditional assets into the blockchain. So in a few years, you might not need a stockbroker. You might just own shares directly on a blockchain. Governments are even testing tokenized bonds. Countries like Georgia have already put in land ownership records on blockchain to prevent fraud. And in real estate, companies like RealIT are selling transactional home ownership via tokens, so you can part own a rental property and collect rent without ever dealing with the tenant. Now, let's talk about the one thing that makes governments panic: losing control of money. With crypto growing, central banks worldwide are rushing to create CBDCs, central bank digital currencies. These are government-issued digital currencies that work like crypto, but with fewer roller coaster price swings and more surveillance. China is leading the charge with its digital yuan already in large-scale testing. The European Central Bank is working on a digital euro, and the US is still Well, debating whether or not it should exist, because nothing speeds up American politics like technology they don't understand. The big concerns. 1. Privacy. Because if your money is on a government-controlled blockchain, do you want Big Brother knowing and seeing everything you buy at 3 AM? 2. Banking disruption. If people can hold their money directly with a central bank, traditional banks could lose deposits, and banks tend to fight anything that threatens their monopoly over their investment of money. But whether we like it or not, CBDCs are coming because governments can't afford to let crypto replace them. For all its promises, blockchain has problems, and a lot of them. In 2022 alone, hackers stole $3.8 billion from crypto projects. Smart contracts are cool, but one bad line of code and someone drains the entire system. Bitcoin can handle 7 transactions per second. Visa does 24,000. Do you see the problem? But Ethereum and other projects are working on layer 2 solutions to fix this. Bitcoin's energy use is famously high, though newer blockchains like Ethereum post-upgrade are way more efficient. Governments still can't decide if crypto is a currency, a security, or just magic internet money. Here's the big picture. Ethereum is upgrading to handle way more transactions with layer 2 networks, like Arbitrum and Optimism already reducing costs. Interoperability is coming, meaning all of these different blockchains might actually work together. DAOs, decentralized autonomous organizations, could revolutionize governance because nothing says democracy like budget proposals open for literal public debate. Big businesses are getting in. BlackRock, JP Morgan, and even Walmart are using blockchain tech for finance, supply chain, and logistics. While it won't replace everything overnight, it's reviewing how money, assets, and data move across the world. So next time someone tells you blockchain is just a scam, remind them, Walmart is using it to track lettuce. And if it's good enough for big lettuce, it might just be good enough for you.